Right now, everyone is caught up in the crypto and the NFT wave, and it's making people some serious money. But sometimes it's easy to get caught up in the popular stuff or the emerging trending stuff and forget about what made us better off before crypto ever came along, which is the stock market. So in today's video, I'm going to cover some of the top money-making industries of the future, or those industries that are projected to have double-digit returns over the next several years. As always, guys, my name is Andrew, one of the co-hosts to Broke Man Finance. Now, I know your time is very valuable, so feel free to use the chapter sections in the time bar below and skip ahead to the sections that you're more interested in. Now, the first industry is a popular project that a lot of people have been talking about this year, and that is the Metaverse. A lot more than 2 companies are involved in this new project, but 2 key players are Roblox, a gaming software which has already seen some tremendous growth this past year alone, and Unity Software, a major provider for 3D platforms that includes gaming, automotive, film, and construction. If you're already involved in the Metaverse or an investor into this, then you know a company like Unity Software is going to be very, very successful if this project moves forward like it's supposed to. Unity Software right now is trading around $137 a share and is up over 33% just the past 6 months. And the number 2 industry is big data. Companies like Snowflake, which IPO'd this year, hasn't really seen a major increase in their stock price yet, but their financials indicate a big future ahead of them. Just this past quarter, their annual revenue increased over 124%, and their non-GAAP gross margin increased from 63 to 74%, which equals an 11% increase. Data storage is a must now with all the massive amounts of information that individual companies have to have stored and be readily accessible whenever they need it. Snowflake, or ticker symbol SONO, Snow, is trading around $331 right now at the time of this video. Now, my employer uses Snowflake, and I can already see that this is a must because individual companies don't have the data storage or the capability to withhold or store all this data in-house, so it's cheaper for them to contract it out for companies like Snowflake. And the number 3 industry is robotics. Now, companies like UiPath are gaining momentum each and every quarter, it seems like. The ability to automate production lines from major companies to even fast food companies is proven each and every day that it not only is it safer, but it's also cheaper than the traditional human labor workforce. Their most recent quarterly report posted over a 50% revenue growth along with other major financial gains. Although they are new on the stock market, they are trading around $41 a share, and they still have a lot of upside potential in the coming years. Now, if you're looking at these stocks and you're thinking, I cannot afford to buy multiple shares of Snowflake, which is over $300 a share, and if your trading platform that you're using currently does not allow fractional shares, I would highly suggest looking at a different trading platform that does allow fractional shares, because it's an easy way to kind of spread your money. If you're investing in individual stocks, not like an ETF or a mutual fund, but allows you to really spread your money across the market and get more bang for your buck, and allows you to be more diversified with your money. And the number 4 industry we're talking about is telehealth or virtual health services. And here's where a company like Teladoc comes right into play. Teladoc Health is really emerged as the top remote health service provider right now in the United States. I personally think this concept or this idea is only going to keep growing more and more each and every day because of major situations like COVID-19. People are starting to use the virtual health concept to their favor while saving time and avoiding those awful waiting rooms. Their stock right now is trading around $95 a share, which has dropped down more to a realistic value from where it was during the past 6 months. But here's a key factor that you got to look at when you look at their stock price and their financial. They went from $418 million in revenue back in 2018 to now they're projecting to end the year with over $2 billion worth of revenue. Truth is, this market has one of the biggest upsides because of this next number. The total United States healthcare spending right now is $3.8 trillion. So as you can see, right now they're bringing in $2 billion. The ability to chip away at that almost $4 trillion market gives them so much more upside and so much more room to grow as a company. Now, the fifth industry we're talking about is cybersecurity. Everyone knows that identity theft has become a major issue when we're talking about personal credit and personal finances, whether it's your credit card, your banking, all that comes into play. But it's even a bigger problem when we're talking about companies who cannot afford to have a major data breach. For example, back in 2013, Target had to pay over $18 million for a data breach that affected over 41 million customers. So here's where companies like CrowdStrike come right into play on this. CrowdStrike right now is one of the top leaders in cybersecurity, and their financials prove it. They posted a great third quarter earnings report with over a 63% revenue increase, and most importantly, a free cash flow of over $123 million. Their stock price right now is trading around $200 a share at the time of this video. And number 6 is cloud computing. Now, we all know that major players are already established like Amazon and Microsoft. But the truth is, there's still enough room for major companies like Salesforce to get a piece of that cheddar. Salesforce had a third quarter revenue which was over $6.8 billion, which translated to over a 27% increase from their previous year. Their stock price right now is trading around $247 a share with a solid growth just the past 10 years. The seventh industry we're talking about is renewable energy. Now, companies like NextEra Energy is a Florida-based energy company that has become a leader in wind and solar energy. Their ticker symbol NEEE right now is trading around $90 a share with a solid growth rate just the past 5 years. A plus side with this company is they do have a dividend payout, which right now is decent, but yet is also manageable. The last but not least industry we're talking about is online sports betting. Now, the stock I like for this industry is DraftKings because a lot of people are saying it's on sale right now, or now is the time to buy. DraftKings is trading around $27 a share with over a 47% decrease this past year alone. When people are talking about buying the dip, or in this case, buying the drop, this could be exactly what they're referring to. But when you look at DraftKings peer, which is Penn National, they have also experienced almost an identical drop in percentage this year as far as their stock price. So in theory, it could be just the industry and not poor management or poor direction of a particular company. However, for DraftKings, the revenue growth for this past quarter was good, with over $213 million on total revenue, which was a 60% growth. Although it's a risky play because you're adding sports betting to the stock market, what could go wrong? But the reality is they have a decent base and the revenue is only going to increase as the years go on. Think about it this way. All 50 states right now currently do not allow online sports betting, which means the market is still growing. 10 states haven't even started the process of allowing betting, which includes heavy hitters like Texas and California, which have massive population numbers, which could translate into more revenue. So guys, I try to keep it short and sweet to the point. I didn't go too technical in these videos. I like to just skim the surface of them. I hope you like it. Feel free to post in the comment section what future stocks you're putting your money into. That way we can share the knowledge. As always, thanks for watching and supporting the channel, and we'll see you on the next one. Later.